guys, my name is Kat, and in this video I'm gonna teach you how to prepare partnership tax return in ProConnect Tax Software. So I'll start with prior year tax return and what information we need from prior year, and then I'll show you how to enter and analyze current year financials and how to enter it all in ProConnect and how to, reconcile all of it. So let's start. It will be fun video. If you're new to this channel, my name is Kat and I have more than 12 years of experience working in public accounting. I was working at Big Four, I was working at music business management. I have been freelancing for the last couple of years. So the purpose of this YouTube channel is to teach you how to use different tax software, how to prepare taxes, and how to become a better tax professional or learn how to be a tax professional and start making money by preparing taxes. Please sign up to my channel and let's start on this video.
Alrighty guys, so let's prepare a partnership tax return in ProConnect. So what you will see on the screen, you'll see two tabs, I would say. One is ProConnect and one would be like this PDF thing, and it will show the financials that I will be using to prepare partnership tax return. And also it will show, so this is technically our 2023 tax return, and this is how I want the tax return to look like in ProConnect, but I will be using some information that supposedly came from 2022, right? So this is what we want as results. I'm going to show you how to get from here to this. So this thing shows up in ProConnect, and this is a correct 2023 tax return. And I'll show you how to enter depreciation and then like the general information that's supposed to come from prior year tax return and how to incorporate those financials, right? Also, I'll prepare like a small work paper right here just to show you how to reconcile balance sheet, because here we don't really have many book to tax reconciliations. Yes, and also we'll have those steps in preparing tax returns. So we'll enter general information from prior year tax return. We'll analyze and create like a work paper analyzing current year financials. We'll enter all that information in ProConnect and we'll be reconciling our work paper or financial to ProConnect. So let's go. So step number 1. General information for the tax return from prior year. What that means. So basically, when we enter tax return in ProConnect, we need to start somewhere, right? So this is our first year. We didn't have this client last year, so we have to enter like basic information. So usually we just create tax return, choose a tax return type, which I chose 1065, that is partnership tax return, and I start with the client information tab. So we would start with client information tab, enter all information needed, and then we'll go into entering partner information and everything else. Actually, let me, I think this is not the return I want because this is empty, and I remember I prepared this one already, so just give me a second. Here you go. Yes, here you go. Here I see all the tabs filled up perfectly, because actually what happened, and that's a funny story, not funny for me, but might be funny for you. I prepared this tax return, recorded the video, going through each step, and then I realized I recorded the wrong screen. So that was horrible. But anyways, I decided to record a new one. So this video, I should sound better because I already know what I was just doing with this tax return. So hopefully it will be shorter and makes more sense for you. But I'm just gonna go over information I already entered and explain it to you instead of you watching me entering information. So it actually might be more fun. So anyways, we'll start with client information. We'll fill up electronic file and other information like this thing. So general section first. Then we'll do partner information. So partner information, partner percentages. This thing we'll do a little bit later because this is related to our 2023 financials and also balance sheet. So let's start with general information. So we start with this like client's details, and for this example, we imagine that we already have 2020 a prior year tax return, which is 2022 in my case. So we can get all that information from prior year tax return. If it's a first year preparing tax return, like let's say it's 2023 and they establish their partnership in 2023, in that case we should use a partnership agreement, we should use information documents, things like that. But for now, let's pretend we have prior year tax return. So this was what we actually will prepare right now, but prior year tax return will look very similar. So I'm just going to use information from here. So here we'll have name and address of the entity, and this is where it goes. The name of the entity, federal ID number right here, and then the address right here, right? So we put the phone number, so those things important. Here's the fiscal year end. So for us, it's a calendar year. And the way to check it on prior year tax return, you can see right here for calendar year 2023. And if it was a fiscal year, we would have dates right here. And we don't, so it means it's fine. It's just this one. Date business began. So this comes from here, section E, date business began. A business code is right here, right? And then we have a principal business activity, principal product or services. So all this information we get from prior year tax return. If you don't have prior year tax return, this thing we have to Google 1065 IRS regulations or instructions, and then we go to sections, principal business and activity, and it will give us all the codes. So for example, if I'm a tax preparation business, I would put principal business activity, tax preparation. Here it's asking me principal product or service. So it's basically telling me like, is it a product you're selling or a service? So you can just put product or service and that will be sufficient. And I've seen many tax returns that things, but also you can put also what kind of service. So it can be like, oh, tax preparation or whatever. And then you look up the business code activity on instructions, right? Accounting methods. So this is where it comes from. If you don't have prior year tax return, look at partnership agreement. It should have information of prior year tax return. All right, so this is kind of all general information we need. The total assets will get from balance sheet, so that's not the one number we enter. It comes from elsewhere. Number of parts K1s also it will generate when we enter K1, so no need to enter. So that's kind of it here. When we go to say second page, and then there is a Schedule B right here. So here we can see if it's a domestic general partnership, if it's domestic limited partnership, what kind of partnership it is. So for example, right here, it says it's a domestic general partnership. So this is what we have to choose here, right? Another one says partnership representative partner. And this is something we can find on this page right here. It says partnership representative. It would probably be listed one of the partners. Sometimes the CEO of the company can be listed, not necessarily partner. So whoever is assigned to sign tax returns. And that's something we can look up at prior year tax return or also at partnership agreement. So when I say prior year tax return, we can use all this information, but I mean, of course, we need to ask the client if something has changed or not. So that's important. And let's see, prepare you can choose, and that should be enough. So, all right, let's go to electronic filing and see what is filled up here. I guess just my name. Awesome. You can put my name. No, I'm just kidding. So this business representative should not be my name. It should be as a partner's name. Well, it can be a business representative. If I'm the one signing tax return, which CPA never signs tax returns for a client, but it should be I think it would be like one of the partners. But look it up here, partnership representative, or look it up at partnership agreement. Other information, Schedule B. Schedule B, let's see where Schedule B is. So Schedule B has like bunch of, not bunch, just a few questions. This is a Schedule B1. And that would tell us who owns 50%. If any corporation owns 50%, so we should just go here, enter entity number, EIN, entity type that owns more than 50% of our entity, right? If individual owns them more than 50%, that should go in part 2. So we can just add them here. So you see, I just jumped a little bit. Let me show you what I mean. So Schedule B questions are right here. Yes, no, all that kind of stuff. So for example, here it says if any foreign or domestic corporation, trust, exempt, own directly 50% of interest. So if answer is no, we just answer no. If answer is yes, we can fill it up here. So you see like question 2A, question 2B. So this is a place to enter it. So you probably would ask me like, okay, so here's the answer, yes is checked, but I didn't really put anything in here. Why I did not? And the reason is why, because this information also comes from K1s. So in K1, if you enter 50% ownership, that means it will just automatically go to Schedule B1, right? And on Schedule B, the question would be yes, right here. All right, so a name of partnership representative, that's also important for us. And what else do we get from prior year tax return? So this is a 2023 tax return. So this is result we want. But if it was 2022, I would get this beginning values for balance sheet. End values from prior year tax return will be beginning values for following tax year, right? So that's important. So any like end of the tax year balance sheet from 2022 tax return will be beginning of the tax year for 2023. Same here, the ending capital right here, right? It should be beginning capital on Schedule M2. So I think that makes sense. So that's kind of it. So after we entered all the basic information, we can just review it. So I would just go to Forms. We don't have to do it now. I usually do it in the end, but I just want to show you. So we can review 1065 and make sure that information we just enter matches our prior year tax return or whatever we want it to be, right? So for me, I already looked at that and it seems like it all works out. Alrighty, so that was part number 1, which were we comparing prior year tax return and enter general information. Another general information, sorry, before I moved in, I forgot like the most important one. So we also need to enter K1 information. So when we go to partner information right here, partner number 1 and partner number 2. So we should enter their name, social security, address, for partner number 2 and partner number 2. Partner number 1 and partner number 2. And enter their profit and loss percentages right here. That information also available from prior year tax return, or if it's a new tax return partnership agreement, we should ask for percentage allocation for their business. Okay, cool. So I think that should be it. And now let's take a look at financials and move to the step number 2, which is current year financials and work papers.
If you got that far in this video, oh my gosh, you're almost there. First of all, we're almost done with this tax return and you'll be able to do it on your own with nobody's help. But if you do think you need help, I also sell online courses, so you can check it out my website remotecpanla.com, and I have a course on ProConnect business tax return preparation where I cover partnerships, C Corp, S Corp tax return. We'll go into more complex stuff. You'll learn the tax law behind it and we'll practice together to prepare tax return. We also will have a weekly calls together so I can answer any questions you might have, and eventually I truly believe you can achieve anything you want to achieve and learn how to do it and make lots of money. So check it out my website remotecpanla.com. Meanwhile, let's continue with the video. Just a couple more things left.
Current year financials. So here's example of current year financials. So we have, I'll just switch to this. We have profit and loss, which is we have sales, cost of goods sold, expenses, all that kind of stuff. So it's nice that they already booked a depreciation for us, but that's not always the case. Sometimes we need to add book adjustment entry to add depreciation, right? And so here's our P&L, and I just kind of scrolled over expenses, and I don't think we'll have any book to tax differences this time. And book to tax differences can be like, let's say 50% of meals and entertainment deduction or any non-deductible expenses. So anything that is different from book to tax. In this case, book to tax would be the same. So book income will equal tax income, right? So that makes it a little easier for us. And then I created this like small Excel schedule for balance sheet and I usually get like Excel financials in Excel. So I would just, make my work in Excel. In this time, it's in PDF, which is fine because I still like my P&L is pretty easy. So there's not much I need to do. So this is okay. So what I would double check when I'm looking at balance sheet right here. So what I did, I just created a small summary for myself. So it's easy for me to know what's going on, when to enter. So here we have total cash, we have inventory, we have equipment. For this example, we assume that equipment was purchased in 2023 and it was fully depreciated in 2023. And full depreciation is taken right here, 125.04. That is sum of those two amounts. So they also book depreciation, and obviously they have accumulated depreciation here, which is nice. Not always that's the case. Sometimes we have to do adjusting entry, debit depreciation, credit accumulated depreciation, and that's just and that would be, so for example, we would have this balance sheet that we would do book adjustment column, and then we have adjusted balance sheet, and this is what we will use on our tax return, right? In this case, this is kind of like very easy. So then we have accounts payable right here. We have partners capital that's supposed to be from prior year, and we have distributions from current year, and this is net income current year. Let me double check if it actually flows correctly. So here's our net income, and in this example, like I said, this is our result, but supposedly if you have 2022 tax return, this beginning of the tax year would be our ending last year, and they had this partner capital that is exactly this one, so it's perfect. This one will just flow perfectly. All we need to do is to make sure we enter this net income on a tax return that will be right here. And if you see on the bottom, Schedule M2 is our capital reconciliation. So this number has to tie to this number for order for balance sheet to reconcile. So we'll start with 160,530 from prior year, add net income 6,842, right? And then we need to enter distributions, and then supposedly we get to this number, right? 126,087. So this one doesn't have any like crazy adjustments because sometimes they forget to book stuff prior year, or maybe bookkeeper changed. So we have to add like prior year adjustment, all kind of stuff to make it look correct. But this one is easy because prior year partner capital ties, net income ties. This is a current year distributions that we just need to enter. So it's all beautiful. Alrighty guys, so I think this should be it for this tab. Let's see what else. Yeah, let's switch to entering information in ProConnect, which will be so much fun. Let's do it. Entering information in ProConnect. So let's see, what would I start with? Honestly, I would start with income. I would go to my profit and loss, and I would start with P&L and make sure P&L ties. So net income, this number should tie to our 1065 page 1 net income. So we'll start with gross receipts right here, right? Entering gross receipts. And the cool part about ProConnect, next year is going to be so much easier for you to enter information because this current year information will go to prior year amounts for next year. So we'll know where did we enter stuff, so it will be which information we were missing. So it's really cool. But this year have to learn the hard way, but will be fun. So cost of goods sold. So I have a note here. I just save it for myself. What is actually cost of goods sold? So we have this formula, beginning inventory equals sales, which is cost of goods sold, plus ending inventory minus purchases, all that stuff. Oh my gosh. So cost of goods sold is actually, let's see what it is. We have beginning inventory, purchases. Yeah, so all this stuff comes in, it's all part of this formula. And ending inventory actually stays on the books on balance sheet right here. So that's why on our P&L it shows as a negative amount. And if you'd like me to explain you more about cost of goods sold, please comment below. I'm gonna record another video on it, but for now all we have to enter is beginning inventory, purchases right here, and ending inventory. Sometimes they do it like, I don't know, they just enter it in a strange way, but our idea is to make sure our ending inventory ties. But this is perfect. This is actually how formula works, but it's not always the case. So if it's not the case, we have to adjust our purchases to make sure we get to this number, total cost of goods sold. So here we are, enter beginning inventory, purchases, ending inventory, and we're moving on to deductions. So here, what I usually do, I kind of just go through each of them. So like I was like, oh, licenses, let me go to letter L and see if it's here. Oh, it's here. Awesome. I'm going to enter it here. And then we go to taxes. Taxes. So this one says property, so real estate taxes. Depreciation, that's something that we do not overwrite. And please remember that depreciation has to be entered under assets, under depreciation. And that's not going to be one number. It's going to be lots of things. So depreciation, we're not entering. Repairs and maintenance. Let's see. Right here. Rent, right here. And then anything else, I couldn't find credit card servicing fees or management fees, so I just went right here and entered them under other expenses, other deductions. Awesome. So this is cool. Now we need to find a way to enter depreciation. So for depreciation, we have to go to section called depreciation. And okay, so let's imagine we don't have this in here, but we look at our balance sheet and it's like only like it would say 2023 equipment and 2023 leasehold improvements. And it means we got something in 2023 and we need to enter it. So where we go, and I already know details. So I would search general ledger, which I don't have as an example here. I'm really sorry, I wish I had. So I would search and see what is actually purchased and enter it here. So in this case, it was like fuel tanks, fuel pumps. So this one will be leasehold improvements, and this one will be just like an equipment. And the category for both of them will be machinery and equipment. Well, you know what? Maybe this one will be improvements. Leasehold improvement 42,000. Yeah, this one will be improvements. My bad. And another one will be equipment. We put date placed in service that we find on general ledger. Cost right here. And then for improvement, we choose this one, 15 years, whatever. 15 years for this kind of improvement. And I was Googling that before. I was like, okay, what do we do for this specific fuel tank things? And they were telling me, Google told me, and I'm sorry, IRS regulations told me that it's 15 years old depreciation. And that's what I chose. And obviously for equipment, we just use 5 years. Okay, cool. So that's it. So after we enter depreciation, we go to, let me show you where we go to. We go to current year depreciation, and that's how it's gonna show up. So and I chose to take section 179, which is 100% depreciation this year, because these people have like lots of income and I want them to save on taxes. So that's why we'll take all of it, but you don't have to. You might decide to just depreciate and take less each year. If somebody is curious about why here it shows 150 decline in balance and here 200 decline in balance, the difference is for something that is 15 years old life for depreciation, this is like you have to do 150% depreciation. And for something that is 5 years old, it goes to 200 depreciation. Those are regulations, you can Google them, but that's just why it shows up this way. So now when I go to 1065, and I have right here depreciation for full amount. That's beautiful. And what I had to do, what I want to check right now, I want to make sure this number, ordinary business number, ties to this one. And if it doesn't, I have to find out why. Sometimes it can be like, and let me show you where also we have a beautiful reconciliation right here. So right here we have Schedule M1 in general. It's called Reconciliation of Income per Books and towards tax return. So book to tax differences. So here we'll have book income, and here we have tax income, and anything in between would be book to tax differences. So that could be any kind of stuff. So meals and entertainment, depreciation. So here's depreciation, but depreciation technically is a book expense, okay? But sometimes if you have different depreciation for books and tax, we can show it here. Or tax exempt interest can be right here because it's not taxable for tax purposes, all kind of stuff. So, you know, but in this case, we don't have book to tax depreciations, so it's beautiful. Alrighty, next step. Fun stuff, balance sheet. One of my favorite and one of the ones that I'm struggling a lot sometimes. Actually, not this time. I was really excited about this one. I was like, oh, this is easy. So I'm just going to show you where I entered the information. So here we have how it's supposed to look like, right? Based on our analysis. So we did this analysis right here. So I already entered the tax return and printed for you, but this is how it's going to show up. So we have total assets, 104,172, the accounts payable, and we have this whole thing, partner capital account, my apologies, that were entered right here. So we started with beginning capital account, which is right here. Then we added net income from here. And then I entered depreciation, and it ended up being this amount, 26,087, same as on those two entries. So let me show you how I entered that. So beginning balances, it comes from prior year tax returns. So we just enter them the way they are. So just accounts payable, all that kind of stuff. And also I went and I entered beginning capital right here. So those three numbers, 1, 2, 3, 4 numbers I entered for beginning, right? So that was our beginning. And when I entered prior year balances, I make sure I go and I check if it reconciles. So what needs to be reconciled? So this total assets and total liabilities and capital, those two numbers has to reconcile always. It's the beginning and the ending, super important. We would not be able to e-file without them reconciling. Actually, I've seen some e-filed returns and that was bizarre. It was like different numbers and I was like, how did they e-filed? But maybe there's some strange tax softwares that allow you to do it. Or maybe it was never e-filed, who knows? In any case, so that's important. Then I'm actually starting with our information for this year. So I'm just going to use Excel to enter it. So what I do, I go here and here it is. I'm so sorry. Again, don't see how to move it. Well, I'll make it bigger. So I enter ending cash from here. And as you remember, all these numbers comes from our financials. I just put them in more presentable way on Excel because it's just easier for me to read. Then I entered, so I do not enter equipment because remember, equipment we do not enter, depreciation we do not enter. We only enter it under our, depreciation, under depreciation section. So all these amounts will be blank here because this information will come from depreciation, and that's the right way to prepare tax return. And then I enter accounts payable, and that's it. I also do not enter partner capital account because that should be calculated, right? What I do enter, I go to Schedule M2 and I make sure we have a beginning capital from prior year. So we already did that. And I only enter depreciation right here, distributions. And that's it. And that will show, it will, in this, and if everything is entered correct, it should all reconcile. We should have no diagnostics there. So here we go. Let's go. Schedule L, we have total assets, total liabilities, and capital. And here everything reconcile. Our total liability, first of all, partner capital equals, I'm sorry, I didn't do it on purpose. Partner capital from Schedule M2 equals partner capital. I wonder if you enjoyed video if I would talk that slow. Maybe you would. I'm sorry if I'm talking too fast. But anyways, so this partner capital right here from Schedule M2 should tie to our partner capital on line 21. That's important. That's what I'm looking at first. And then total liabilities and capital right here should equal total assets. Always, right? We all know that. Then let's take a look at K1s. I want to make sure it's all like looks okay and I can see it all looks good. I have no more diagnostics left. So I think that should be it. Yeah, so we make sure, important part, right? Make sure we reconcile to our net income from financials. Also, it might be some things that we'll need to add or deduct. That could be all kind of stuff, right? Like say depreciation wasn't booked here. So we need to, on our Excel workpaper, we need to add, oh, book income is this one plus depreciation, and then it will be our taxable income. Then we go to our balance sheet and make sure we enter information. Important things to remember. Assets, we do not enter on current year. We go to depreciation schedule, enter them there. Also, we do not enter prior year assets anywhere else. We don't override them. We need to enter them under depreciation schedule because we want to make sure we account for all depreciation and we present it the way it was presented last year. The reason why, what if we sell this asset at some point, we need to calculate the gain. All this information will be extremely important. So we want to make sure we have it as clean as possible. Well, I think that's it. We have this beautiful tax return filled up. I hope that was not too much work for you. Thank you so much for, staying with me and have a great day. Bye.
Well, and that's it. And now you know how to prepare partnership tax returns. So please subscribe to my channel, comment below if you found this video helpful. I recorded like 1 hour video and I hope somebody will comment that it was helpful. That's all I want. Well, thank you so much. I'll see you in the next video. And good luck. I'll believe in you. You'll do great.